Good afternoon. Can I just get a show of hands? Who's here that's like from a company or running a company? Okay, and who's investors or potential investors? Oh, about 50-50. That's pretty good. All right. Look, I'm here today to talk about sustainability and how it is actually a strategic business tool. And I'll tell you a bit about Ansarada quickly and then move into that. So the name Ansarada comes from the four founders you can see on the screen. There's Andrew, Sam, that's me, Rachel and Daphne, so our first two letters. We started off in 2005, 2006, building a product to help due diligence in capital raising, M&A. We ended up growing that quite a lot. And if you follow Ansarada, we're listed and recently announced we've entered into a scheme of arrangement to sell Ansarada's deals business for $236 million, which is a long journey. I could stand up here and talk about the founder journey and raising capital and all the rest. But what I am here to talk about, if this works, there you go, the names. Sorry, Zoe, you've prepared that. So our purpose has always been giving order and structure to critical information and processes that people rely on. So you can imagine when you're doing due diligence with an army of lawyers, accountants, bankers, you might have 7 bidders, you might have 3,000 questions coming in. There's a lot of critical information being exchanged. There's a lot of people involved. So that we really got obsessed about how do you simplify that? How do you make it less risky? How do you make it structured? And that's what we focus on. And then, sorry, I've got to go back. What we ended up developing was 4 products. So we've done about, I'd say, 40,000 deals, like M&A deals, capital raising. And being a technology company, we got very curious about what makes a capital raise successful, what makes an M&A deal successful, what about the unsuccessful ones, what do they have in common? And we have millions and millions of data points and thousands of relationships. So a lot of our passion to help people beyond the deal was because we saw companies that were unprepared for their biggest moments when they're doing M&A, and all of their gaps and inefficiencies and things they could have and should have done earlier end up getting highlighted, and they don't realise their potential as a result. And often there's quite sophisticated people that have done dozens and dozens of deals on the buy side, but sometimes companies, it's their first time doing it. And they really don't get the outcome they should because other people on the other side are more experienced than they do. So we got passionate about helping with that. That's why we developed a product to help with risk and compliance and governance and how do you structure your business sustainably with ESG, because if you don't do those things, they will impact your outcome. But they actually are things that can help you grow strategically. So I've got 4 questions, right? But I want everyone to, hopefully everyone can put their hand up on the first one. So I want you to raise your hand if you've thought about, from a business perspective or investment, if you've thought about what you can do with sustainability as an investor or a company. You've at least thought about it. Okay. Leave your hand up, because it's one of these things you put your hand down when you... Yeah. So the second one, so within your company or your investment process, have you actually started doing anything related to sustainability? Pretty much everyone's still up. That's good. Next question. Have you developed a sustainability strategy that's specific around sustainability? Okay, still a few up. Last one. Is your sustainability strategy and your core business strategy one and the same? They're pretty much linked. Okay, 3 people. So we should give these people a round of applause. So that's very good. So my main point is often sustainability ESG is seen as a risk or a tick box or we should do something there, but it's actually a very, very powerful strategic tool to increase your business value. And I'll quickly hurry on and show you why. Now, who's been confused by the world of ESG or sustainability and the different standards and reporting? Does anyone find it confusing? Yes, most people. Okay, cool. We have looked at everything and we're building products to help people. I can tell you 100% confidence, every single regulation and standard that you are expected to do as a company and you should do, come back to these 4 principles. And the good news is they're 4 things that everyone in this room understands. Strategy development, like setting priorities, diagnosing your current state. What are the metrics and targets? What is your approach to risk and opportunity management? How do you do that? And how is this governed in your company? Roles, responsibilities, process, procedures. Those 4 things are all you need to do to progress on sustainability. Then it's not a weird and wonderful world. It's actually goes back to these 4 things. Now, of course, there's reporting and disclosures, but that's not just an annual sustainability report. It could be a report for a customer RFP. It could be in a slide in an investor deck. It could be a due diligence report for capital raising. So if you're doing these 4 things above, you can export them out and prove what you're up to. Now, the biggest mistake we've seen companies make when they start on their sustainability journey is they act without diagnosis. And acting without a diagnosis in the medical profession is called malpractice. Like if you went to the doctor and he just started injecting you with something, you'd say, hang on, you haven't even diagnosed what's wrong with me. Why are you treating me? So usually that one issue people act on is greenhouse gas emissions. So they say, hey, we've got to do something on sustainability. Let's measure our scope 1 and 2 emissions. Let's put out a statement. And it's the wrong approach. There's actually about 40 or more potential priorities your company should have to consider. So you should diagnose which one of these issues are actually relevant to you and they're going to make a difference. Now that is what's called strategy. That's when you do a diagnosis and you determine the most material, the most significant priorities that are actually going to help your business grow, but also operate more sustainably. So where that starts, and one product we built to help is this thing. I'll give you a QR code later on, but this is totally free, 10 minutes, and you can just get a gap analysis and benchmark your company on environmental factors, social and governance. Now, after that, because that's 10 minutes and you get a beautiful report that you can share and publish, well, I'll bring this back later if you want to get it later on. But the next step to set a strategy for sustainability is also the outputs of this are exactly what you need to do to grow your business value. So has anyone heard of a materiality assessment? Okay, great. You've done it. Okay, great. Did you find it complex at the start? Yes. Years ago. Okay. So sustainability strategy is it is actually simple, but it often lives in the world of consulting and it can be complex and expensive. But I'm going to attempt in about a minute to break it down for you and encourage you to consider it as an investor, recommending to companies you're invested in or if you're a company. So impact materiality is basically what impact does your company have on the world? So with what you do, your product and service, how does it impact people? How does it impact the planet? So take Ansarada, we deal with a lot of critical information, capital markets data. we impact that. So obviously issues like cyber security, privacy are critical. That's where if we don't do a good job, we could cause a lot of disruption and pain to people's reputations or society. Someone like Starbucks, they obviously use a lot of water, they procure coffee beans, so they have a lot of impact on the planet with their raw materials. So you go through and consider that. Financial materiality is the opposite. That is what's called outside in. So what's going on in the world, what's going on with the people and planet that would affect you? So obviously take Starbucks, they have to keep they've got inflation happening with costs, they've got a supply chain risk, all the rest of it. So they want to make sure that procuring high quality coffee beans is sustainable and also doesn't increase their costs too much. And if there's changes in climate that affects coffee production, that would affect them. So they impact on one end, but also they are impacted. So that's taken into account. So that's, if you've heard the phrase double materiality, that's what it is. It's how do you impact people and planet, and what issues and trends in the world are impacting you, and what does that mean for your company? What should you do about it? Now, you can do that in a top-down approach. So you can look at major events and news and industry. What are your peers doing? What are they prioritising here? What's going on? And regulatory requirements in your industry. And there's also a bottom-up approach. So you can go to your stakeholders like customers and investors and suppliers and say, hey, how do we impact you? What do you believe are the most significant issues for us to address? You also can look at your company risks. What are your strategic opportunities? So you do all this together and you end up with a full double materiality assessment, and you don't have to do it all at once. So here's an example of what we ended up with, right? So we did all of that, and the number one issue that came out for us was cybersecurity, privacy, customer data, IP, and responsible product service delivery. So they were our most material issues. So we ended up saying they are very strategic to us. Our stakeholders care about them, and if we screw it up, we will impact a lot of people without what we do with our company. So we have to do a good job. Now, then that turned into a lot of execution and operations internally, because if people are saying this is important and you do a good job, then your marketing team use that and say, let us tell you what we're doing on these things. Let us tell you how much more secure we are. Let us tell you how responsible we are with our product service delivery. And all of the work we're doing to actually de-risk those issues and make them stronger turns into real, tangible evidence that is used to grow our business and acquire customers. And also internally, our staff, get behind all these. Part of strategy is executing it. So if you say to your staff, listen, we're serious about sustainability and we've done this assessment and here's the results, you get a lot more fellowship and advocacy from your employees around your sustainability strategy. But hopefully I've shown you today that it's not a tick box exercise. If you go through things like a materiality assessment, you will end up sharpening your strategy and you will end up engaging your employees more. You will end up executing on some things that all your stakeholders care about, and you will grow your business. You will increase your revenues. And a byproduct of that is when you go to raise capital or when you go to sell or list on the ASX, you will be able to export all of this out in a beautiful report that evidences how sophisticated the management team is and how dedicated they are and the types of governance practices that have been instituted in the business. Good policy, good process, clear roles, clear responsibilities, accountability, actions, progress, metrics, targets. These are words that I guess every investor wants to see as a strength. So they actually instill that in the company. So I'm way over time, but you can take a photo of that and look it up and send it to someone. Totally free, 10 minutes. It'll get you started. Thank you for your time, and hopefully I've demystified the world of ESG for you and you can make some more progress. Thank you.